right, what's up, everybody? Welcome to the official Trade Talk. Oh, how dare you interrupt me right in the middle of an intro? Come on. Nah, I'm just kidding. What's up, everybody? Obviously, we had a rate hike. Who could see that coming? Nah, that's a joke. Obviously, we knew there was going to be a rate hike simply because it's been a 98% chance of a rate hike for what? Almost a whole month. Yeah, we pretty much knew it was going to be a rate hike. You can check right here on the 1 month. Let's go to the daily because this thing doesn't have liquidity. It is not a tradable asset, but as you can see right in here, boom. There's your 25 basis point bump. And it's been slowly trending up until the day came. So we were going to wait for the news. Somebody in the Discord dropped a link for me, please. If you don't mind, that would be great. Basically been pretty quiet out there today. Let's pull up the options broker. As you can see, the where it is, that TSM trade right there. It's just a small little spread right there. Bought one in the money, sold one out the money for a nice little pop in price. So if price can get up above $100, $101, I'll make some money on that trade. All the other ones, they're losing money, but they're spreads. So the idea is to hold them out in duration. That way you can gain the time value. As far as Bitcoin goes, it hasn't done anything at all since the drop the other day. All right, nothing. I mean, you can look at today's range. You're up 0.28%, even after we got the news. You would think there would at least be a spike to the upside and downside, at least 1% or 2%. What do we got here? Total range on the day. Yeah, 1%. It's doing nothing. Nothing. But it did what we said it was going to do. If we lost support, we were going to drop down to the 50. And there we are. So we'll see if this holds as support. This is the 2021 yearly opening range. Obviously, that's what's holding as support, not just the 50, as that is a big level. So we'll see if this area holds. I'm not holding my breath. If it gets down to the Q2 open, I'll look for long entries there. I can't short it now. When you short stuff, you want to short stuff on swing highs. Like this one here, that would have been a beautiful place for a short. That is exactly where we took a short on this right there. And then this big boy right here came in and took me out of the trade. So that's what I was doing. So I'm actually missed this entire move to the downside. Hopefully some of you all caught it. I mean, you knew what I was looking for the near term. Long term, I'm still bullish on Bitcoin, but I mean, there's a lot of stuff out there it's not looking too bullish. I mean, here is your implied volatility, if you will, right? It's the Bitcoin volatility index from Bizin. I mean, it's on lows, lows. Even after we had that move to the downside, you just got a little drop right there. It's just pathetic. No volatility means, that there's not much happening. So like in the options market, when you see, let's just pull TSM up on the actual chain here. When you look at the implied volatilities, this is your supply and demand. All right, that's what calculates implied volatility, supply and demand of the actual option chain itself, of the underlying asset. So, yeah, I mean, that's it. And if Bitcoin is trading for stocks, anything over, 30, 40 is good for, for selling options, but you want stuff over 50. Like when you're under 50, you can buy options, right? Because you won't lose a ton of money on the implied volatility decay. But I mean, there was a clear and obvious entry. That's today's open. That's also daily support. So, I mean, if you were going to be looking to get long, this is the price to do it. If we go into the 5-minute time frame, you can see that you didn't quite get down there. But if you were going to buy it, that's where you would want to have bought it. Or earlier on in the day, if you wanted to buy it, you should have bought it right there. But if the whole marketplace knows that you're going to get a rate hike, the whole marketplace is going to price that in ahead of time. Now, the S&P 500 and NASDAQ hasn't really priced it in ahead of time, as they are still trading at the top of their ranges. But this has a lot to do with a couple stocks, right? You got your Nvidias, you got your Facebooks and all that stuff. Taking stuff to the moon. I posted in the Forex room that I was expecting this to hold as support. There you go. There it is, right there. Beautiful. Support has held. Now, I don't know if we're going to continue to the upside or not, but this is the area that I was telling people to watch for support. And the simple reality of it was that right there. That little tick right there. Boop. And then also, there is a legit, let's try one more time. Legit price level right there, being old resistance, right? Old resistance sometimes flips as support. I mean, it don't get no easier than that. You got your one little candle or two little candles that closed there under the 21 exponential, making people think that it's going to rotate back to the downside. But the reality of the situation is everything's bullish because the dollar is bearish, right? The dollar is bearish. Now, a rate hike should be good for the dollar, but since the dollar trades against a basket of currencies, what those independent countries do with their money will also depict what happens to the dollar. For instance, in Europe, they have more inflation than we do currently. Let's just say that. So, they're gonna hike rates for a much longer time expected than we are. So that in itself could force the dollar down based on the euro inflation alone. But we'll see what happens. Nothing likes inflation. Nothing likes inflation. I'm sorry, I'm just looking at something here. So it still did run up after we had a nice bout of inflation, didn't it? Didn't it? All right, give me a second here. We got 15 minutes. Nobody cares anymore. Well, like another hike, I guess. Yeah. Yeah, somebody needs to post the link for me. You can't post it in the chat. Post it inside the Discord, please. So we can watch the Fed be all hawkish and stuff. I'm trying to look for bonds. There it is. There it is. There it is. US inflation rate. I know, can't do log. What, have they done something again here? Yeah. June 2022. So the DXY still had a pretty strong move up even after inflation was rocking and rolling. Anyways, let's go. Nice move to the upside. Took out yesterday's high. That's nice. Just volatile stuff. So what I'm expecting is I'm expecting the Fed to come out and be hawkish. I'm expecting them to say, oh, we're still not seeing the stuff that we want to see, so we're probably going to remain hawkish. I guess these people are not in the actual live on YouTube, so let me... Thank you, Brian. Oh, that's the doc. That's not what I want. I don't want this. I want the Federal Reserve. All right, somebody will hook it up. All right, so that's that. Let's go down here. TSM's down because it had a gap down today. But basically what happened is we called a bullish move on it because we felt as if though this was going to be a trap right here. So basically somebody asked to see this chart and asked me to chart it for him. And I like the fact that it was bullish on the year. This is your yearly opening range down there. And this just looks like a nice, trend. You got higher highs and higher lows, right? Everything else that has to do with semiconductors is absolutely flying. So I said, let's see if this ends up being a bear trap under the 50. And if we get a move up above 98.94, we will be looking to be a buyer there. Well, when we actually got the move up, it gapped up. So it didn't really give anybody a good opportunity to get long. It did on the wick, but it didn't touch the actual level that we were looking for. Why that level? That level is weekly support. Now, when you look at this chart, it looks like this is supply. This thing's going to roll over, right? So I had to fight with myself today about it. But looking on the daily, I mean, this looks like a nice consolidation, pull back, drop down into the 50, and then go. So I got long while we were trading at 98.94, but I did it with a spread. The reason I did it with a spread is it's just safer. Right here's the spread if you want to see it. It is a call spread. I bought the 98, which is in the money strike, and I sold the 101. So anything above, 100 and something, 102, like not $102. It was like $100.28. Then it'll start making money. And the closer that it gets to the 101 mark would be the area to close the trade down. It has a very, very limited risk, and it's cheaper to do spreads than it is to just buy the outright put or call, right? Because you're going to pay more money for it. So by doing the spread, it limits your downside and it limits the amount that you pay for the actual thing. And let's face it, nobody's looking for an infinity move, right? They don't happen. There's nothing, there's no such thing as an infinity move to the upside. All right, so I got the link. Now we're just waiting to see the Fed. We got 9 minutes. I'm not going to play it until it's 2:30 because the last time I did that, I got in some kind of trouble. I guess the music that they play at the beginning before the Fed starts to speak is licensed. And I didn't have a license for it, so they demonetized the channel. Or not the channel, but that video. And it wasn't a copyright strike. It was just hey, we're going to take your money, which ain't nothing anyway, so it doesn't matter. All right. Spark them if you got them. Okay, so we'll see how he acts, but I do believe he will be a little bit hawkish, because there's some evidence out there that we're gonna see a spike in inflation. So this is where I bought it today. It's not what I want to see. I want to see it keep going, right? It's in here is where the sweet spot is. If it could get up in there, I'll close the trade live. Show you how it's done. The Facebook trade I closed this morning because I forgot all about the meeting and I did not want to leave that Facebook trade open just in case I wasn't able to get back and close it. If we go look at Facebook, which is now called Meta, you'll see that it had a nice drop this morning. So as it was dropping, obviously I sold it because I was up. I was up $30, $30-something on a $5,000 account. It's not quite a 1% gain, but it's close. It's close. I held it for 2 days. It was guaranteed money. Guaranteed. But I wanted more, obviously. But I just didn't have the kahunas to hold it through earnings. Because they got earnings after the bell today. And Snapchat. I had my strike up at 350, and I did a measurement to see about how big of a move it would have to be to actually get up there. And you could see it's a big one on the 5-minute time frame. It's not so big on the daily. It's a 17% move. So if we go into Snap real quick, because they had earnings after the bell yesterday, and let's just do a little brief looky-loo there. Look at that, 17%. So if Facebook does that to me tonight, well, it can't hurt me now, but before the position was closed, woo, that would have hurt. I would have been in the red big time, and that would not have been good. So it's about protecting your capital, right? Would I rather keep the whole $144 that I got for selling the call? Yeah, of course I would. But would I just like to go ahead and get out and make a profit and limit the risk Of course. That's how you do it. If you guys know of any options trades or any stocks that you want me to look at, we'll throw it on together. Right? We'll look at some stuff. Snap really big there. Implied volatility on Snap is, well, here, I'll pull it up on Tasty since I got it right there. Yeah, 101%. Yeah. Well, see, that's also what killed the profitability on Facebook, Meta, whatever. Was when I put the trade on, the implied volatility was it was at 98%, right? So if you have an increase in implied volatility, that inherently is going to raise the value of the option. When you sell a call option or a put option, you want the value to drastically decrease. You don't want it to gain, because when it gains, you lose money. So if we hadn't gotten IV pump, like if it would have stayed at roughly 90%, I would have been able to get out of that trade with a lot more money. But since the IV pumped up to over 140% at one point today, I had to bounce with whatever profitability I could get out of it with. You know what I mean? But we'll let the earnings happen, and then we'll see how the IV looks next week, right? After the earnings, which will happen today, we'll see if this IV gets crushed. If it doesn't, we'll come out here and we'll look for some stuff closer to the, to the expirations, and we'll look for a spread again. We'll look for something to trade. The object is to take this $5,000 account and turn it into a higher account live. So this will be the account that I will be putting trades on and stuff. Once we get all the videos done, all the options videos, all the strategy videos, then I will start actually posting trades in the Discord. Every trade I take for this account will be posted. So yeah, we'll see what happens. But let's go back to Bitcoin. What's it doing? Nothing. It's going right back down. So buyers and sellers just having a fun day today. Just a big fun day. S&P 500 down 0.5%. Getting smoked. I bet you that's daily res. It is daily res. Look at that. Right there. Yesterday it broke it. Today you're getting ready to take out the low. So imagine the sells that were adding up here throughout the day. Lots and lots of them. And if you were only aiming for the downside of the range, which is there, boom. Good trade. Good job. Good job, everybody. Good job. All right. So obviously, if you want to take a trade, I don't really want to on the S&P 500 because I'm actually short, but on the small contract, on the micro ES contracts, I have a short option way out the money on that. So I want to see it go down. All right. Oh, I thought I put in the slash MES. So you can see I here at 65 days. I got a 4,900 strike. That's just a naked option right there. Setting there, losing money because this thing keeps climbing up the price because it's moving higher and higher and higher. It's a micro ES, so it's based off of the ES minis or the E mini contracts. The S&P 500. There's also NASDAQ micros and stuff like that. So small accounts can sell options on that brokerage. tastytrade. Just to show you real quick, like if I sell this option and then go to review and send, look at how much buying power. Which that's not right. Okay, right here. The estimating buying power effect is $816, right? And I'd give $71 credit, which it's weird because that says 14 and 1550. It's a micro. I think it's cut in half by 5. 5.5. But that's the one that's there. That one's gonna stay on as long as we don't breach 4,800 on the ES. If we breach 4,800, I'll close that position for a loss. What's up, everybody? Walmart, WW. What's WW? WW. WW. International Inc. Yeah, it's flying. It just had earnings, so you gotta wait. It don't look good though. I'll just be honest with you. I mean, it's up on the year, but it's made fresh yearly lows. I mean, fresh all-time lows. But it does seem to do good. I mean, as far as the earnings goes, I don't even know what this is, but it's getting killed. There's your quarterlies. Looking pretty rough. This is going to be the yearly opening, so we need it to be yellow. Yeah, I mean, you got the earnings coming up, right? So I mean, if you do take a trade on it, then you definitely want to be out of it before earnings. Because nobody knows what's going to happen on earnings. I'll tell you why. Let me just pull up Microsoft. Microsoft beat. They beat on earnings. They beat. That's a beat, right? They beat good. The estimate was 2.5. They got 2.69. Revenue estimate, 55.4 billion, 56.18 billion. So that's a beat, but still ended up getting sold off. Look at that. It's 100% gamble when you trade into earnings. There's nothing that's going to say it's going to go up or down, right? It doesn't matter. Does not matter. So be very careful on WW because it's definitely coming up. And I don't know what you're looking for. Are you looking for a long? Are you looking for a short? I would not be looking to short it, especially since it's just shown you a breakout and squeeze. This thing could squeeze for a couple more days. Yeah, I mean, it was a buy at support, right? Which it did break down and lie to you. But whenever the 21 is that close, you just got to understand that even if your support is right there, the 21's down here. So you have to understand that price will more than likely make a run to that because algos are switched to buy that. If it looks like this, right, the 50's under the 20, algos will buy it, especially if you're above the 50. That is buying criteria. I mean, it's the oldest, easiest setup in the book. So your buy would have been around $8. Around $8. I wouldn't buy it up here. And you got earnings coming up next week. And then Walmart and Amazon. Walmart making almost fresh all-time highs. There's your yearly open. Yeah. Oh, it's so close. What is that? High 155.21. 160.69. So it did make a fresh all-time high. Walmart's the same. It's trending to the upside, right? Boom. Look for support. 153.49. A pull back into there. You want to see this area hold. That's all-time highs on Walmart. You don't want to buy at all-time highs. You want to buy on dips, pullbacks. Like you could essentially just thrown a trend line on this thing and been pretty close, right? Not there, but like there. You would have got stopped out here. But remember, you got to always allow for the next 2 weeks to show you, is it or is it not going to be a bear trap in an uptrend? Only in an uptrend, okay? Only in an uptrend. If you're in a downtrend, then you would look for the same scenario, only you would look for a weekly close above the 50. Obviously, the 50 would be trending down with price, right? So if you got a spike up and a breakout above the 50, then you would look for a breakdown, right? You would expect that to be a trap. Why? Because it's in the trend. The trend is your friend, my friends. Always stick with the trend. It's so much easier to do. Always. I mean, right in here, right in there. That's when we would have been looking to be a buyer. And then you had this area right there. That was your breakout area. Oh, look at that. Boop. That's where you would have looked to been a buyer on Walmart. Now, you did break down, but like I said, we always expect that in an uptrend to be a trap. So you got to wait for Walmart to pull back to support again. I would probably let it pull back to 146 if it does, right? If it does. As in an uptrend, your 50 is going to be a better place to be a buy. And your 21 will be a decent place to buy too. But the 50 will get you on those deeper corrections, the better ones. Because the object is to always buy low and then sell high. So I don't know what you got planned for that. But don't short it. I mean, you can, it might work. It's a 50-50 chance, right? 50-50 shot. And Amazon, it's coming down. Nice. It's going to give a pullback. Look at that. It's broke below the 21. It's broke below that support, that support. This thing trades very choppy. So let's see if we can let's get a weekly support over here. I know it's got one. Is it time? Oh, it's 5 minutes past time. Beautiful.
Balance of risks. We remain committed to bringing
screen, please.
Inflation back to our 2% softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country.
All right. Let's see what he gets to say. We already know what he's going to say.
Longer.
Why can't I? There. Volume is up. There we go.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. Today, we took another step by raising our policy interest rate a 1/4 percentage point, and we are continuing to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Looking ahead, we will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate. I'll have more to say about monetary policy after briefly reviewing economic developments.
Let's do it. Let's do it.
Recent indicators suggest that economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago, largely reflecting higher mortgage rates. And higher interest rates and slower output growth also appear to be weighing on business fixed investment.
I'll answer that question, Go Plex, if you can wait for this to be over.
Over the past 3 months, job gains averaged 244,000 jobs per month, a pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply
Look at all
of available
those
workers.
bloodthirsty reporters.
Inflation
Bitcoin's
remains well
going right
above
back
our
up to
longer
high
run goal of
days.
2%. Over the 12
Sorry, I'll
months
keep
ending
them
in May,
playing, but
total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the
S&P
Consumer
500
Price
picking
Index,
up.
or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets.
a yucky,
The
rainy
Fed's
UK
monetary policy
evening.
actions are guided by our mandate to promote
didn't think it
maximum
rained in the
employment and
UK,
stable prices
Michelle.
for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning to inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 5.25% to 5.5%. We are also continuing the process of significantly reducing our securities holdings. With today's action, we've raised our policy rate by 5.25%.
We got to remember, we're also
since
5
early
minutes
last year.
behind.
We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized, especially on inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting, based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks.
Bitcoin fresh high of
We
day,
remain
according to
committed to bringing
Bitget.
inflation back to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require
Yeah.
a period of below-trend growth
That's a fresh
and some
daily
softening
high.
of labor market conditions.
So if you were wanting to
Restoring
short
price
that,
stability
that's where
is
you would have
essential
wanted to
set the
take the
stage
insurance.
for achieving maximum employment and stable prices over the longer run.
If you think it's going lower.
To conclude,
Trading
we
the
understand
news
that
is a
our
50-50
actions affect
thing, right?
communities, families, and businesses across
Wait for
the
it
country.
strafes the lows or the
Everything
highs
we
and
do
then
is
just
in
take
service
the
to our
opposite
public mission.
position.
We at the Fed will do everything we can to achieve our maximum employment. and
This
price
isn't a very
stability
big
goals.
move either,
Thank
so
you,
don't
and I
get
look
caught
forward
up
to your
in that.
questions.
You're still looking at just 1% at that,
Mr. Chairman, thank you.
or
I
0.34%.
think a couple times in your opening remarks.
Why is it
talked
on
about this
fire? It
language
is
in
not
determining
hot.
the extent of additional policy firming that may be appropriate. Should we take that to mean that additional hikes are likely on the way? And should we also believe that all future meetings, say September and November, are live, or are you in a every other meeting mode? Thank you.
So we haven't made a decision to go to.
Okay, I'm going to answer this. I know this one. We're going to be data dependent. We're going to move from month to month to see what we're going to do. We're going to see how the economy works and such and such. And as long as everything is going all right and the job market is still strong, we're going to hike again. When? I don't know.
Other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same question. So we haven't made any decisions about any future meetings, including the pace
Stream
at
is
which
way
we
behind,
consider
bro. Yeah, I
hiking.
know.
But we're going to be assessing the need for further tightening.
We
when may
already
be
knew what he was
appropriate,
gonna
and you read
say.
the language to return inflation to 2%
Every
over
time. We always know what he's going to say.
I would say that the intermeeting data came in broadly in line with expectations. Economic activity remained resilient. Job creation.
You're not
remained
here to
strong,
watch him,
while
are
cooling a
you?
bit,
You're here for
and the
me.
June CPI report actually came in a bit better than expectations for a change. And the June CPI report, of course,
You're
was
gonna make me
welcome,
jealous
but it's
over
only
here.
one report, 1 month's data.
We don't
We
care
hope that
about
inflation will
Powell.
follow a lower path but it will be consistent with the CPI reading, but we don't know that, and we're just going to need to see more data. So what are we going to be looking at? Really, it will be the whole broader
Yeah,
picture.
not
And
just the
starting with,
CPI number.
We're looking
They're not just looking for that. They're looking at a lot of other stuff. And there's some data that suggests that the CPI month over month and year over year charts are going to catch up to each other. And we're probably going to see a spike in CPI. When? We don't know.
for moderate growth, right? We're looking for supply and demand through the economy coming into better balance, including in particular in the labor market. We'll be looking at inflation. We'll be asking ourselves, does this whole collection of data, do we assess it as suggesting that we need to
Both
raise
of
rates
us.
further?
Okay, I
And
can
if we
live
make
with
that
that.
conclusion, then we will
I don't
go
have
ahead
no
and raise
body
rates.
problems.
So that's how we're thinking about
Me
the next
and
meeting.
Powell get it on
And,
for y'all.
how we're thinking about meetings going forward potentially. But, we're now mainly thinking about the next
I don't
meeting.
know how he'd feel
I will
about
also
that,
say,
but-
since we're talking about
I'm
it,
game.
between now and the September meeting, we get 2 more job reports, 2 more CPI reports. I think we have an ECI report coming later this week, which is Employment Compensation Index, and lots of data on economic activity. All of that information is going to inform
Let's
our
see if
decision
Bitcoin
as we
doesn't
go into
make
that
another
meeting.
high
I
and
would
then
say it
drop.
is certainly
If it does, I'll
possible that we would
probably
raise
take a
funds
short
again
on it,
at the September
just
meeting
for
if
the
the data
heck of
warrant
it.
And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting. And I'll close by saying we've raised the federal funds rate
I
now
thought
by
I had this on the
525 basis
S&P.
points since March 2022.
I want to keep it on the S&P
Monetary
so I can
policy,
watch
we
the
believe,
price.
is restrictive and is putting downward pressure on economic activity and inflation.
If I could just briefly follow up on something you said there. You said the data in the intermediate period, it broadly came in line with expectations. Does that mean there's unlikely to have been a change in the overwhelming outlook of the committee that 2 more hikes are necessary?
I'm just going to go back to what I said.
Yeah, I'm not gonna answer that,
That's the question.
bro.
We have 8 weeks now until the September meeting, and all that data that I recited, we're going to be looking at all of that and making that assessment then.
Right.
And it really,
You're going to have
we
2 more
did have the one good
CPIs. You're
reading,
going to
and
have
of
2
course we
more
welcome
everything.
that, but it's just one reading, as everybody knows.
Before the next
we've seen
hike.
We've seen this
Or the
before in
next
the data.
meeting.
Many forecasts call for rates, for inflation to remain low, but we just don't know that until we see the data. So we'll be focusing on that.
Gina. Thank you. Thanks for taking our questions, Chair Powell. Obviously, you upgraded the
She didn't
language around
thank
growth
me.
in the
I'm
statement
also
today.
listening.
We've seen the Barbie movie numbers. We've seen everyone going to Taylor Swift
Oh,
concerts
come
this
on.
summer.
Barbie,
It seems like the
he's-
American
he
consumer is in
doesn't
pretty
give
good
no
shape.
care about
and it does seem
Barbie.
like growth is sort of picking
Nobody
back up
does.
a little
That
bit, or at
movie
least
was
doing
terrible.
well. And I wonder, from your perspective, if that continues, if we see growth not just stabilizing but doing,
Or I thought so, anyway.
performing well this summer, is that a problem because it's inflationary, or is it good news because it suggests that a soft landing is more likely? Just how are you thinking about that sort of trajectory?
Well, we
Yeah,
don't
so,
watch
I would say it this way.
movie.
The overall resilience
Stuff,
of the economy,
numbers.
the fact that
They look at
we've been
everything,
able to
not just
achieve
what's happening at the
disinflation
box
so
office.
far without any meaningful negative impact on the labor market, the strength of the economy. Overall,
The labor market,
that's good.
the
It's
Hollywood
good to
labor
see
market
that,
is
of
probably
course. It's also, you
very
see
small
consumer confidence coming up and
compared
things
to
like
the
that.
rest
That will support activity
of
going
the
forward. But you're
labor
right, though.
market.
At the margin, stronger growth could lead over time to higher inflation, and that would require an appropriate response from monetary policy. So we'll be watching that carefully and seeing how it evolves over time.
you don't know.
Neil.
Thanks, Chair Powell. Neil Irwin from Axios. So as you referenced earlier, in the intermeeting period, soft CPI, jobs reports, still strong but moderating.
Apple
JOLTS
all-time highs, Nvidia all-time
So if you're down
highs,
dependent, why not
Microsoft
pause it?
all-time
Why not stay on
highs,
hold? Why not take another
Walmart
meeting
all-time
off when the data
highs.
was at least cutting in the direction you want to see?
So if you go back to what we're trying to do here, we're trying to achieve a stance of policy that's sufficiently restrictive to bring inflation down to 2%. At the last meeting, we wrote down our individual estimates of what that would take, and the median of that was an additional 2 rate hikes. So I would say we looked at the intermeeting data, and as I mentioned, broadly consistent, not perfectly consistent, but broadly consistent with expectations, and as a result, we went ahead and took another step.
Closed 2/3 of my
And that's,
long, got
a
my
labor
weekly
market that
goal.
continues
Nice,
to be
Andrew.
strong,
Good
but
stuff.
gradually slowing.
Keep it up, bro.
I mentioned that the inflation
that
report was
week
actually
by
a little
week.
better than expected, but, we're going to be careful about taking too much signal from a single reading. And, growth came in stronger than expected. So that's how we look at it, and so we did take that step today.
System unstable.
Nick
it
Timmeros
says.
of the Wall Street Journal. Chair Powell, markets widely believe the median FOMC participants' inflation forecast from June for the fourth quarter of this year will be too high, given
short.
autos and shelter, and that by September that may warrant a downward revision in the inflation forecast of 20 to 30 basis points.
I'd say you're safe.
Would that type of inflation progress be enough to
He
hold
said
rates
something.
steady from here, or do
We're
you
just-
need to
we're
see
5
below
minutes
trend
behind.
growth and
There's your high of
decelerating
day
real
right
income
there.
growth to be convinced that you've done enough?
So it's hard to pick the pieces apart and say, how much of this and how much of that. We'll be looking at everything. And, of course, we'll be looking to see whether the signal from June CPI
Nice.
is
Get your ass up
replicated
there, boy.
or the opposite of replicated, or whether it's somewhere in the middle. We'll be looking at the growth data. We'll be looking at the labor market data very closely, of course, and making an overall judgment about that. It's the totality of the data, I think, but with a particular focus on
Where
making
did
progress on
Bitget
inflation.
go? I lost Bitget.
Follow-up. Last month, you said there were benefits to
Found it.
moderating the pace of increases because it would give you more information to make decisions. Would another CPI report, like the one we just had in June, allow you to at least maintain that slower pace and defer until the fall any decision
that's probably gonna be
on
the
whether you
short.
need that second rate
If
hike?
you took a short on this,
So I'm
make
just
sure
going
you
to tell you
take
again what we're
profits
going to do.
before
In September, we're going to look at
29,204.
2 additional job
If you
reports,
get there,
2 additional
right?
CPI
Because
reports,
this is daily
lots
support.
of activity data.
It doesn't mean it'll
And
stop there,
that's what
but
we're going to look at, and we're going to make
that's
that
a safe
decision
place
then.
to
And
take
that decision
profits.
could mean another hike in September, or it could mean that we decide to maintain at that level. And again, the question we're going to be asking ourselves is the overall signal one that we need to do more, that we need to tighten further? And if we get that signal whenever we get it, then, and that's the collective judgment of the committee, then we will move ahead. If we don't, then
we
we'll
won't.
have the option of maintaining policy at that level. But it's really dependent so much on the data, and we just don't have it yet.
Chris.
he's been saying the same exact stuff
Hi,
for a whole
Chris
year.
Rugaber at Associated Press. So consumer confidence in the economy is rising, likely in large part because of the
20-year-old
declines in
film
headline
student son
inflation.
said Barbie was better
We
than
also see
Oppenheimer.
wages are also
Oh,
rising
gosh,
faster
that's
than
because he's
prices
20.
now, after trailing them for a long time. How
The
much are
significance
Americans
about
truly
Oppenheimer
harmed
is
by inflation at
what
its
you would
current
go watch
level,
it for.
headline level of
But to be honest with you, the guy that made that movie, in all fairness to your son, did you see Tenet? I mean, that movie was terrible. And I heard, I don't know, I haven't seen Oppenheimer, but I heard it's similar to that. Like you're bouncing back and forth throughout his entire life at different parts of the film without any warning or anything. So, yeah, we'll see. I'll watch it. I will not watch Barbie.
3%.
No.
And with that in mind, when do you put some weight back on the employment side of the dual mandate?
I watched the critical drinker's
So I guess
view
I'd say it
on
this
Barbie,
way,
and that's
first,
good enough for me.
It is a good thing
I
that
take his
headline
word
inflation
for it.
has come down so much, because that's really what the public experiences. And I would say that having headline inflation move down that much almost creates it will strengthen the broad sense that the public has that inflation is coming down, which will in turn, we hope, help inflation continue to move down. So you were really, sorry, what your question was?
Sold
Well, when you
9%
talk
positive.
for many
Damn.
press conferences now about
I'm short
the
SPX,
harm
but doesn't
created
seem
by
to be getting
inflation,
much
how hard
follow
it is
through
for
at the
people. So
moment.
how much of
What
that
is your
are we
opinion
still
on
seeing
gold
with
and ticker
inflation
symbol
now down
gold?
at 3?
So I guess I would put it this way.
I mean,
I'd say it this way. It's really a question of how do you balance the two risks, the risk of doing too much or doing too
This
little.
thing took
And,
out yesterday's high.
I would say that, we're coming to a place where there really
if you make
are
a
risks on
fresh
both
high,
sides.
bounce.
It's hard to say
All
exactly
right?
whether,
That's all
whether
I
they're
would
in balance
say.
or not. But
If you make a fresh high,
as our
bounce.
stances become more
Because it's
restrictive,
just too
and
volatile. This
inflation
is a
moderates,
big
we do
move.
increasingly face that risk.
like if you look
But,
at the daily now,
we need to see that inflation
I mean,
is
you're right
durably
there.
down that far.
But
as
that's
you
still
know,
a
we think, and
decent
most
level to
economists
watch
think
for
that
shorts.
Core inflation
That's
is
gonna
actually
be
a better
your
signal
open of today.
of where headline inflation
So,
is going.
right
Because headline
there,
inflation
but gold-
is affected greatly by volatile energy and food prices.
Yeah,
So
it's doing
we
the
would
same
want
thing as the
core
S&P
inflation to be
500.
coming down, because that's what we think. That's
What's the
core
dollar
is
doing?
signaling where headlines
going
are
down.
in the future. And core inflation is still pretty elevated.
Why
There's
is the
reason to
dollar
think
going
it can
down?
come
Hold
down
on.
now, but it's
Hush,
still
hush,
quite
hush, 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 hush. It's my turn to speak. Why is the dollar going down? It's simple. We did a rate hike. It should be bullish for the dollar, correct? Correct. It was priced in. All of this right here, this massive pullback was pricing in the fact that there was going to be another rate hike. Plus, it's in a downtrend, right? So this is an opportunity for people to get short again. This is monthly support. I said the last time we had a live stream, which was yesterday, to watch monthly support for short entries on the dollar, or, take that on the euro. So if the dollar is going down, gold's going to get a spike because the gold is priced to the dollar, XAUUSD. That's the gold spot / the dollar. Even if I type in just gold, it's going to be the same ticker, right? But yeah, if the dollar is going down, this is a good spot to be a buyer. Once again, I pull this up. You can see that you have a decrease in momentum, which is what you need in order for a pullback. We had daily support locked in right here, and we did this on the last live stream. And as you can see, it's moving to the upside. Your yellow 21 exponential moving average has now crossed the green 55, which is good. So, I mean, as long as we don't have no negative, terrible news in the next 4 or 5 months, I don't see why gold can't keep its uptrend going. I mean, it's bullish on the year. It's bullish on the year. This is your yearly open. That's your yearly low. There's your yearly high way up there. So as long as the dollar continues to make fresh yearly lows, I would expect gold to continue up. But that doesn't give you the right to buy it right here, right? You want to buy on the pullbacks. I can't say that enough. Like for instance, the trade I took today, right? The trade I took today, I waited for it to pull back to the level that I was watching. This is intraday. So basically, we were looking at this to be a bear trap. It ended up being a bear trap with this candle here. So the next time I get a retest of 98, 94, I'm going long. And I did today. And so far, it's working out. It took it a little while to get going, but now it's going. Now, how does that affect the position itself? I don't know. Let's go look. TSM right here. Let's close it up because it's going to show you. We want the total P&L open is $26. Remember, this is a $5,000 account. So it's not quite 1%, but I'll watch it. If it starts to drop, I'll close the position for a small profit on the day and just consistently grow the account over time.
Quite elevated, and so we think we need to stay on task, and we think we're going to need
Bitcoin
to
is struggling.
certainly hold policy at a restricted levels for some time, and we need to be prepared to raise further if we think that's appropriate.
Spike right there is what got me.
Well, and then if inflation were to, just a quick follow, if it stays at 3 or drops even a little bit more, I mean, how much of an increase in unemployment do you think is acceptable to get that last bit of inflation? People are talking about the potential difficulty of the so-called last mile of inflation. So, but how much unemployment do you think is justified to get down that last?
So it
One-
is
4.4%.
a very positive thing that actually the unemployment rate is the same as it was when we lifted off in March of 22 at 3.6%. So that's a real blessing, and that we've been able to achieve some disinflation. And we don't seek to, it's not that we're aiming to raise unemployment, but I would just say the historical record, we have to be honest about the historical record, which does suggest that when central banks go in and slow the economy,
Screw
to bring
up the
down
economy
inflation,
is
the
a
result
better
tends
word,
to be
bro.
some softening in labor market conditions. And so that is still the likely outcome here. And we hope that that's as little as possible. We have to be honest that is
Technically,
the
it's
likely
not
outcome.
them that's screwing up
worst
the money.
outcome
It's
for
the other
everyone,
people
of course,
running the
would
world.
be not to deal with inflation.
They're
now,
like the
not get it
cleanup
done.
crew.
Whatever the short-term social costs of getting inflation under
Cleanup
control,
crew, that's
the
what he is.
longer-term social costs of failing to do so are greater, and that the historical record is very, very clear on that. If you go through a period where inflation expectations are not anchored, inflation is volatile, it interferes with people's lives and with economic activity.
Damn
and,
sure does.
That's the thing we
$9
really
for
need to avoid
18 eggs. That's not cool. Not cool at all.
At this point, you say the policy is restrictive, but all year long we have seen growth surprise to the upside, unemployment to the downside, and inflation lately to the downside. So I'm wondering, by definition, should you be restrictive enough right now under these conditions? Do you think you might need to do more? Because I'm curious about what you see as inflation dynamics now. Is the economy still moving in a direction where it creates more inflation? People talk about base effects and higher energy costs, and now we have some large labor settlements. Or is the economy disinflating, and you're able to go back to the old Fed policy of opportunistic disinflation?
So I'll just say, again, the broader picture of what we want
Energy
to see,
sector's rising, but
we wanna
it's
see
still
easing of
negative
supply
on the
constraints-
year.
constraints and normalization
Come on,
of
bro.
pandemic-related distortions to demand and supply. We want to see economic growth running at moderate or modest levels to help ease inflationary pressures.
I mean,
We
he's
wanna
from
see
Bloomberg.
continued
He's got better
restoration of
charts than
supply
I
and
got.
demand balance, particularly in the labor market, and all of that should lead to declining inflationary pressures. Now, what we see is those pieces of the puzzle coming together, and we're seeing evidence of those things now. But I would say that what our eyes are telling us is that policy has not been restrictive enough for long enough to have its full desired effects. So we intend, again, to keep policy restrictive until we're confident that inflation is coming down sustainably toward our 2% target, and we're prepared to further tighten if that is appropriate. And we think the process, still probably has a long way to go.
Wait.
do you think-
Did he just say that he would further raise rates even if he did get this 2% target? I mean, that's kind of ridiculous, isn't it? You can't use the 2% target as the reason you're raising interest rates and then say, no, we got to keep doing it because we found out 2% isn't good enough. You can't do that.
Under current conditions, you are restrictive enough unless something changes?
Well, I think we think today's rate hike was appropriate, and I think we're going to be looking at the incoming data to inform our decision at the next meeting about is the incoming data telling us that we need to do more, and if it does tell us that collectively, if that's our view, then we will do more.
As of right now, let's see what the CME says.
Thank you. Colby Smith with the Financial
3.5% chance that they're going to rate hike in September.
A live meeting. How does that square with the need for a more gradual tightening
75%
pace
chance
you
that they're
spoke
not
of
going to
last
do
month
jack
in explaining the
squat
rationale for
in
holding
September.
the funds rate steady at the June meeting?
So a more gradual pace doesn't go immediately to every other meeting. It could be 2 out of 3 meetings, right? It just means if you're slowing down. The point really was to slow down the decision cycle as we get closer and closer to, we think, our destination. And I wouldn't want to go automatically to every other meeting because I just don't think I think it's not an environment where we want to provide a lot of forward guidance. There's a lot of uncertainty out there. We just want to keep moving at what we think is the right pace. And I do think it makes all the sense in the world to slow down as we now make these finally judged decisions. And so that's what we did. And so
gonna be
I
month
think it's
by month.
possible, I mentioned before, it's possible that we would move at consecutive meetings. We're not taking that off the table, or we might not. It's really going to depend on what the data tell us. That's the best we can do.
So we shouldn't assume that every other meeting is the lowest tightening frequency, let's say.
Why
It could
would
be,
you?
Longer
They've
intervals in
been
between
literally
as well.
raising
I think
interest
we're-
rates at every single meeting for a year, and they pause one time, and you automatically assume it's going to be pause, hike, pause, hike, pause. Oh man.
Look, I think we're gonna make a decision about the next meeting, and then we're gonna make a decision about the one after that. And
I feel
think it'll
sorry
sort
for you,
itself
bro. He's answered that question 37 times
Thanks,
already.
Howard Schneider with Reuters. Among your colleagues, there have been people who've said they feel that very little transmission has taken place so far from monetary policy into the economy, and there are those who feel, they say, it's happened very fast this time and it's kind of up to date. Where are you on that continuum?
We're going to watch month-over-month
there's
data
long-running
and
debate,
see how
about
it continues
the
to
lags
progress,
between changes in financial
and we'll
conditions
move on
and the
from there.
response to those changes from economic activity and inflation, right? So we know that in the modern era, financial conditions move in anticipation of our decisions, And that has clearly been the case in this cycle. So in a sense, the clock starts earlier than it used to, but that doesn't necessarily change the process from that point on, and it's not clear that it has. I'll tell you what we know and then what we don't know. We know that financial conditions affect economic activity and inflation with a lag that can be long and variable, or lags, plural, that can be long and variable. A lot of uncertainty around the length of the lags, and by the way, that's just one component of the broader uncertainty that we face. So I'll tell you how I think about this. The first thing to say is we're determined to bring inflation down to 2% over time, and we will use our tools to do that. No one should doubt that. I would look at it this way, though. The real federal funds rate is
that
now
is
in
hawkish
meaningfully
as
positive
hell.
territory. If you take the
What
nominal
he
federal
just
funds
said.
rate, subtract a mainstream
We
estimate
will
of
use
near-term
our
inflation
tools
expectations,
to
you get a real
squash
federal
you
funds
like a
rate that is
bug,
well above
if
most
necessary.
estimates of the longer-term
Like
neutral
Darth
rate.
Vader.
So I would say monetary policy is restrictive, more so after today's decision, meaning that it is putting downward pressure on economic activity and inflation. We'll keep monetary policy restrictive until we think it's not appropriate to do so. So that's how I think about it. I mean,
So basically, when the market
I would say
crashes
we've come a
55%,
long
we
way.
will stop
We
raising
are
interest
resolutely
rates.
committed to returning inflation to our 2% goal over time. Inflation has proved stronger than we and other forecasters have expected. And at some point that may change.
Bitcoin's not exactly crashing.
We have to be ready to follow the data, and given how far we've come, we can afford to be a little patient as well as resolute as we let this unfold.
On the credit side, I'm wondering if you saw anything in the latest SLOOS data that made you think you're getting a quantum of credit contraction beyond what you'd expect. The bank lending data really is, the growth rates edging down towards and heading below zero, which is usually a recession indicator.
So I guess the SLOOS will come out early next week, and I would just say it's broadly consistent with what you would expect. You've got lending conditions tight and getting a little tighter. You've got weak demand, and it gives a picture of pretty tight credit conditions in the economy. I think it's really hard to tease out how much of that is from this source or that source, but I think what matters is the overall picture is of tight and tightening lending conditions, and that's what this SLOOS will say.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. Could you break down the reasons why inflation has fallen and what share of that credit you would give to factors that don't stem directly from rate hikes or that might be within your control at all, like easing supply chains and a drop in energy prices over the past year?
Yeah,
we didn't have anything to do with it. Thanks for bringing that up. Yeah, we deserve none of the credit.
Question. So let me start by saying that the inflation surge that we saw in the pandemic resulted from a collision of elevated demand and constrained supply, both of which followed from the unprecedented features of the pandemic and the response from fiscal and monetary policy. And we've always expected that the disinflationary process would stem from both from the normalization of those broad pandemic-related supply and demand conditions and from restrictive monetary policy, which would help return the balance between supply and demand by restraining demand. And we think that's broadly what we're seeing. So to go break it down a little further, of course, headline inflation has come down sharply from elevated levels as energy and food prices have come down, mostly due to reversal of the effects from the war in Ukraine. And that's a good thing, and the public experiences that, as I mentioned earlier. For core inflation, I'd say there has been a role for both factors, both that I mentioned. Clearly, for goods, normalization of supply conditions is playing an important role, as is the beginning of the reversal of spending back into services and away from goods.
What he's saying now, what he's saying 5 minutes from now.
As an example, the combination of an increase in sales and inventories.
That's going to help the SPX short.
While vehicle
good
inflation
job, Brian. Take profits.
Points to a substantial
Take profits
role for supply.
now.
But there's also a role for
that's going to hurt my
as,
trade.
The loans and things like that are more expensive. So they're both
yes, it did.
Housing services inflation now starts to move down. Clearly, higher rates have slowed the housing market.
Whatever you said, take it back. Take it back now.
I would say monetary policy is.
I'm just kidding. I'm short the
S&P
500
We think it'll play an important role going forward, in particular in non-housing services, where really we think that's where the labor market will come in as a very, very important factor. So we think both of those sources
on.
of disinflation are playing an
I
important
got
role.
stuff I need to
And just
talk
to follow
about.
up, do you think that of those two sources, that core will rely more heavily on seeing an impact from rate hikes, or is there a more even split there too?
I think monetary policy is going to be important going forward because we're sort of reaping now the benefits of the reversal of some of the very specific pandemic things. We're seeing that with goods in particular, with supply chains and
Damn.
shortages.
The S&P 500 is
And we're
moving
seeing-
like a point,
I think
point and a
going
half,
forward,
2
monetary
points.
policy will be important, particularly in the sector, in the non-housing services sector.
Now it's down to 54.9, 55.
Thank you, Chair Powell. First, let me
54,
compliment your tie, the choice of tie.
55.
So thanks for taking our question. So the Beige Book, it said, input cost pressures remain elevated for services firms, but eased notably for manufacturing sector. Is that an indication that there's a wage inflation pressure? And how do you target and pressure on the wage inflation without pushing the economy into recession?
I think as it
Profit
relates
taken
to
from our
goods,
short.
it's
Good
really
job,
an indication
Kit.
that supply chains and shortages are easing.
You just gotta wait.
And so what was the first part of it?
And I mean, there
wage
it is.
inflation, like how do you
Absolutely
target wage
beautiful.
inflation without pushing an economy
That's a
into
fresh
recession?
low of the day.
I don't think we're targeting wage inflation. I think what we're looking for is a broad cooling
Yeah.
in labor market conditions, and that's what we're seeing. So wages have actually been
Yeah.
gradually moving down.
High
They're still
took
at
out
levels
yesterday's
what
high, made a fresh
would-
daily
what would be
high. You
consistent
just made a
over
fresh
long period
daily
of time
low.
with 2% inflation. Nonetheless, we're making progress there, and by so many indicators, labor market demand is cooling. You can look at surveys by workers and businesses who see that. You can look at the quits rate normalizing. You can look at job openings coming down. You can look at just job creation in the
Nice work, man.
establishment survey has, it's still at a high level, but it was at really an extraordinarily
Get
high
that
level
cheddar.
for most of the last 2 years. So you see cooling, particularly in private sector in the last, in the last report. So I think we see that, and it's happening at a gradual pace. So that's actually not a bad thing in a sense, because if what we see is a labor market, very strong demand for labor, which is really the engine of the economy. People are getting hired, many people going back to work, getting wages, spending money, and that's really what's driving the economy. But that it's gradually slowing, it's gradually cooling. That's a good prescription for getting where we want to get.
But still, we see a push to raise minimum wage. We're seeing a lot of unions go on strike or threaten strike. And the common thing is they come out with agreements like big pay increases, like UPS, and we have the auto workers coming up. Are you concerned then about a trend of series of big unions, these contract pushing wage inflation then?
Not for us to comment on contract negotiations. Not our job, not our role. We monitor these things and we'll keep an eye on them. But really, that's something that's handled at that level. And not,
Victoria. Hi, Victoria Guido with Politico. I wanted to ask about the SEP, which suggests that you would cut rates as overall and core PCE get to around
Cut
under
rates.
3%. And so I'm wondering, is the level of inflation what's sort of important there as you think about getting to 2% and when you might start cutting rates, or is the speed at which inflation
He is not going to tell you when they're going to start cutting
I think you
rates.
take both into account.
Not
I
for
think
at
you take
least
everything
4
into
more
account when we
months,
start cutting
5 more
rates.
months.
It would depend on the whole, on a wide range of things. And when people are writing down rate cuts next year,
The yield curve is still inverted.
It just is a sense that inflation is coming down, and we're comfortable that it's coming down, and it's time to start cutting rates. I think, but I mean, there's a lot of uncertainty between what happens, in the next meeting cycle, let alone the next year, let alone the year after that. So it's hard to say exactly what happens there, what's motivating people.
So if it's sort of stubbornly in maybe the high 2s, you wouldn't necessarily cut rates.
I'm not saying that at all. I'm not giving you any numerical guidance around that. I'm saying we'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year, I don't think.
Boom,
It
that's
would
what dropped the
many
market
people
right
wrote
there.
down rate cuts for next year. I think the median was several for next year.
But the
And
market was
that's just gonna
pricing
be a
in
judgment
this
that we have to make
this
then,
rate
a full
hike
year from
already.
now.
I mean,
it'll
that's
be about how
why
confident
last
we
week
are
was all
that
bullish.
inflation is in fact coming down to our 2% goal.
That was the comment that dropped the market. I guarantee it.
A good part of Wall Street has become more confident that the Fed is going to be able to engineer a soft landing, and they've reduced their forecast for recession. And I'm wondering if the staff has changed its view on the likelihood of recession being likely, and if you personally have changed your view in terms of becoming more confident that you can achieve a soft landing.
So it has been my view consistently that we do have a shot, in my base case is that we will be able to achieve inflation moving back down to our target without the kind of really significant downturn that results in high levels of job losses that we've seen in some past.
Pepe's my kitty cat.
In some past instances, many past instances of
my head
tightening that
and
look
flipped
like
over
ours.
a bunch of stuff.
That's been my view. That's
there's someone outside
that's
weed
still my view.
eating. It's Florida.
And
There's
I think,
always a lawnmower,
that's
weed
sort of
eater,
consistent
chainsaw running.
with what I see today. So, but it's a long way from assured, and we have a lot left to go to see that happen. So the staff
Bitcoin
now
is
has
at daily
a noticeable
support
slowdown in
for
growth starting
Mr.
later
Hank
this year in the
Reuters.
forecast. But given
Reuters.
the resilience
Anyone
of the
looking at
economy
Bitcoin
recently,
here?
they are no
It is
longer
daily support.
forecasting a recession.
But
I mean,
the obvious pressure on Bitcoin has been to the sell side lately.
which is independent.
I would
of the
probably be more
we,
leaning
as FOMC
that we're going to
participants
see
produce.
lower prices. But
Having an independent
obviously,
staff
I don't
forecast,
know what's going to happen.
as well as the individual
but
participant
daily
forecast
support is
really
always a
strength of
decent
our-
place
of
to
our
look for long
process.
entries.
There's just a lot
Regardless.
of, I think, constructive
on the
diversity of opinion that
yearly
that
trend,
helps us
that it's
make,
bullish.
Informs our deliberations.
Like when he
helps us
shuts
make,
up, I'll show you.
I hope better decisions.
This weekly
is the
pullback
reason
is
for
literally
optimism that
nothing.
Inflation has come down, and you still have a strong labor
I
market.
mean, we're still in the
does that,
$29,000
add to the
range.
optimism?
I wouldn't use the term optimism about this yet. I would say though that there's a pathway, and yes, that's a good way to think about it.
30K,
seen
above
so
30K
far
is where supply is
the
at.
beginnings of disinflation without any real costs in the labor market, and that's a really good thing. I would just also say the historical records suggest that there's very likely to be some softening in labor market conditions. And consistent with having a soft landing, you would have some softening in labor market conditions, and that's still likely as we go forward with this process. But it's a good thing today.
Was
that
there
we
a
haven't-
dot
we
plot
haven't really
matrix?
seen-
Does anybody know if there was a dot plot matrix this time? I know there was last time, and they were talking about not even cutting rates until like 2025. So why would that woman even ask that
And
question?
we've seen softening through not through unemployment, not through higher unemployment. We've seen softening through, job openings coming down part of the way back to more normal levels. The quits rate, so people are not quitting as much. We've seen participation, people coming in, and so labor supply has improved, which has lowered the
You're gonna have to
temperature
sit
in the
down
labor
now.
market, which was quite
I can't have you all up in my face.
going back a year or so. So we're seeing that kind of cooling, and that's very healthy, and we hope it continues.
Thank you, Mr. Chairman. Jeff Cox from CNBC.com. You and other Fed officials in the past have suggested that you don't need to keep hiking until inflation hits 2%, that as long as you see continued progress. So I'm wondering, how close do you need to get with the inflation numbers coming down? How many months of data do you need to see that will give you sufficient confidence? And how far does this fight need to go before you're willing to kind of declare victory on it?
So the idea that we would keep hiking until inflation gets to 2%, it would be a prescription of going way past the target. That's clearly not the appropriate way to think about it. So. In effect, if you look at our forecasts, the median participant, and again, these are forecasting out years, so take them with a grain of salt, but people are cutting rates next year. Because
I'm about done with this guy. Yeah, let's do that. All right. So, yeah, I mean, they're not going to tell people when they're going to hike, right? Or cut rates. That's not how it works. Let me fix my stuff over here. My cat just came barreling in. All right, here we go. Let's get off of this. All right, so what was your question? Hold on, there was one before. A guy asked, or someone asked about how do you find Gogoplex? How do you spot a shift in trend? The way that I typically do it is I'm an intraday trader as well as an investor / swing trader, whatever, right? Like, what I usually typically do is I look at the 21 EMA on the daily, And then I look at basically where we are on the daily time frame on the RSI. Because the way if you look at this is this is a momentum oscillator. So, it doesn't go up and up and up, right? It just oscillates between overbought and then the 50 mark and then oversold the 50 mark, yada, yada. So typically I'll watch the 21, and once price breaks down through the 21, that means you're going to get pretty damn close to this. If you drop below that on the daily, there's a pretty good chance that you could potentially have a near-term trend change on your hand. However, if you pull up the 21 on the daily, you're going to see there's a lot of times, like right in here, for instance, that, could have looked as a trend change, but then the shorts got smoked the very next day, right? And then it dropped right back down, and then the shorts got smoked again. So, but typically when this thing starts to curve down, right, on the daily, then I'll go out and I'll watch the weekly. The weekly does a pretty good job, right, of telling you when you've had a trend change. Not always, but pretty good job. Let me get rid of the 50 because it's the 21. Right here, I want you to look at this. All right, this is the top of the marketplace. All right, and then you had this candle right here. This is a weekly candle, and it took all week, but it was a very weak week, if you will. You closed under the 21 right there. And then this was a retest. What was it retesting? It was retesting this candle's wick right there, right? You also have an area of supply right there. Oops, nope, that's support right here. So we typically look at that as demand or supply if it's on the upside. But demand zone there. Demand held, demand broke. Where did price immediately come back to test? Demand. Did it find demand? No. And look where your 21, what happens with it. It arches and crooks over. So this little spot right here is an outlier. And it is also an area to get short. Right here. Right? That is what you look for. Now, are you going to be able to short, are you going to be able to short like the exact high? Absolutely not. There's no strategy in the world that will tell you that you need to start looking for shorts. However, if you go back to my videos when we were in this time, we knew that the Fed was going to do a 180-degree turn. And there was literally people on Twitter saying these words: the Fed cannot cut or hike interest rates. They can't. It's not going to happen. While they were saying that, we were looking for short entries. You could have shorted right there. 45, 65, right? Beautiful place to get short. If you got stopped out there, then wait for it to get back under. Look what happened the prior week. Retested it to perfection. Short entry, stop above that. Or just buy the 40, 45, 80 put, right? That way your risk is completely managed. You don't even have to put a stop on it. Just buy however many puts you can that you can afford to lose, because the premium on the puts, depending on where your expiration will, they will dry up. They'll dry up and become worthless. But as long as your put is in the money, you can hold on to that thing forever, right? But this was a very good identifier of a trend change. So on the daily, it happened quicker, obviously, right? On the daily, it happened much quicker, but we were having these like choppy bouts right in here. And then we jerked up, made a fresh all-time high, which you should have seen price continue from there, right? Because why? That's a short squeeze. You got above an all-time high. There is no reason for there to be supply here. The fact that you got 1 day, 2 day, 3 day, 4 day, 5 day, 6 day, 7 day, and then back down under, yeah, should have been looking for areas to get short, right? Because when you break out and you're at fresh all-time highs, I mean, profit taking comes in, but for it to last a week, nah. Look at every other single time that when price made fresh all-time highs, what happened, right? Broke through, bearish, broke through, retest, sayonara. That's like 8 days, 9 days in a row, a straight upside. That's what should have happened here. And we already knew. I told everybody in October, because in October, that's when we started hearing rumors that the Fed was going to start to hike interest rates and do a complete 180 on their monetary policy because inflation was rising. We knew inflation was rising. When we heard that, we had our, we were ready, but it was still not time to get short yet. If you would have watched the weekly was a perfect example of when to get short. And like I said, it's not always going to work, right? Here's another time. That was what we call a bull trap. And look how many weeks it took. 1, 2, 3, and on the 4th week, confirmation that you're probably going lower. Confirmation that you're probably going lower just by watching that moving average. This is the area where I would have been looking for short entries. Boom. And that's just the low. That's the low that we got now. Why did we switch bullish? Because of this right here. The same thing. This is very weak. And I even said it on Twitter. There's no way in God's green earth that the market is going to give you a third bull trap in the same freaking downtrend. It just doesn't happen. Go back in history and look at every single bear market. What usually happens? Usually you have one down, one up, and then a puke, right? Here it is, puke, just gone. Here is a fantastic point in time. I shorted this right in here. Beautiful area of shorts. Confirm that there is a potential trend change. And then you find a resistance level right here. And then this week, you could get short. Boom. Nice. Right? This didn't work. But you can see the weakness just wasn't there, was it? I mean, 1, 2, 3 weeks testing it. You got to be very, very cautious. Because like I said, when it goes, it goes. This isn't a very good, here we go. I mean, 08's always going to be the one, right? This was a fake out right there. Fake out move to the downside. But look how many weeks did it take for it to drop after retesting the 21? How many? A lot. There's like 1, 2, 3, 4, 5, 6. Like at that point in time, you just gotta say there's a low, right? And you gotta switch your bias. But right here would have been perfect. You made an all-time high, and then what happened? You immediately dropped. And then you tested the 21, got a bounce, and then you dropped. And then here's your bull trap right there. Same exact scenario that happened on this bearish market or in 2022. New year, new trend. All right, always keep that in mind also. But there's your bear trap, a bull trap. There's a bull trap. And see ya. Price was gone after those two. So literally, when we made that third one, I was like, nah, nope, this isn't even right. Plus, in June, right here, this is when inflation topped 9.1 tick. And we all knew that was a pretty good chance that was going to be the bottom or the top tick. And if we continued to trend lower from that point in time, we were to look for bullish entries. And then we did make a fresh yearly low right there. That's your 2022 yearly low. Then you had a bounce from there, set the yearly open for 2023, and it was see you later to the upside. This is why we were bullish. 2023. Because there's just too many damn bull traps in there. This just ain't falling as fast as it should be if there's going to be that kind of pandemonium, destruction. It's finding a trend is as simple as that. These are my goalposts, basically. Are we up on the year or are we down on the year? That's a pretty good objective place to start. If you're up on the year, you are bullish for that year, right? If you're under the opening, then you're probably looking for bearish entries. However, I just pulled up the XLE sector earlier. You're coming up to the yearly opening range. Are you going to short that? You can, but it was tested here. It was tested here. And these are weeks. 1, 2, 3, 4 weeks right there. 4 weeks of testing. Then you drop. Did you make a new low? No, you didn't. You made a higher low. So you're coming right back up to it. So you can watch further short, but look where your moving average is. Look where your moving average is. This can be looked at as a breakout. And then what did you get next? Continuation with this candle right here. That's bullish continuation. That's what you want to see on a breakout. It literally is telling you that this is potentially a breakout. It is going to struggle here, right? But if it gets above it, it's probably going to continue higher. I would be safe to say that your 2023 lows are in on just about everything. Have you looked at the financial sector lately? I mean, it's cooking to the upside. Now, I got a short position in this, and it is not working. You know why? Because here was the breakout. This candle, that's your breakout. Now, you still have to give credence to the fact that it's bearish on the year. But still, there's your breakout above the 21. There's your retest of the 21. Also retesting that Heath level right there, which is also known as what? Demand. You came in for a retest, and what'd you get? You got upside continuation. Then a close. Then you open. Then what? Upside continuation. The markets will show you if you just look. And you got to get off of the 5-minute time frame, right? You just got to. I make my day trading, like when I make a decision to go short or long, it's not based on what I'm seeing only intraday. It's based on what I'm seeing across the board. Across the board. Like, we knew that Bitcoin stopped following the not the XLF, but the NASDAQ, right? We knew that Bitcoin was following the NASDAQ, but then it quit. It quit right here. This is when Bitcoin and the NASDAQ broke apart, right? Because the NASDAQ, bullish continuation, bullish continuation, bullish continuation, bullish continuation, bullish continuation. And then finally, you got an area of consolidation and then bullish continuation. So, like, literally, you could drop all the way to here and still be considered bullish. You could drop all the way to, like, roughly in there. Because that's where your 21 is. This thing is extremely extended. I do not like buying extended markets. Absolutely not. But it doesn't really justify a short either. I mean, it's smoking. It's cooking. You haven't even broken the daily 21 yet. And that has to happen first. Right? Like, I almost want to see a break of the 55 on the RSI and then go look and see where the weekly is. Now, like I was talking about earlier, if we look at Bitcoin as it is, let's get rid of everything. All right? Look at this. Here's your yearly opening, bullish continuation, pullback, bullish continuation, and then nothing. And then we pulled back. Where did we pull back to? Yes. 21 exponential moving average. That also happened to be the time when we got the news, but I would suggest that it had nothing to do with the freaking news. I could make a technical argument of that's where I would have been a buyer anyways. The problem that we had is it was making new support after new support after new support. It was being difficult, right? Difficult to trade. So that was a beautiful test. You broke down below it for the beginning of that week. It looked terrible, and then you closed up above it. That's a very good sign. And then this happened, right? But we've been up here long enough now to where we can clearly say there is literally no buying going on at 30K. None. Like, every single time you've hit $31,000, you've sold off. You hit $31,000 here, close to it, you sold off. And then you had that pullback. And then boom, we get back up in there, bearish candles. Then you get what? Right here. What happens? You make a fresh yearly high, instant sell off. Instant. Like that day. Fresh yearly high, sold off. And then we got this test of this daily 21. So we thought this was bullish. And then we got this, what we on this channel call the Statue of Liberty candle. Because when this baby came in right here with this higher close, this test of the 21, you have 2 days of pullback, then you get expansion, expansion, pullback, expansion. We thought that it was going to go like it should have. You should have seen the very next day, a bullish candle, then a bullish candle, then a bullish candle. You get what I'm saying? What happened instead? It freaking absolutely sold off. Took out every bit of the gains that we got on this day and took out the low. And here we are. Right? There's your 21. You can see how it sloped down now. But on the weekly, you still got plenty of freaking room to pull back. I just don't like this price action at all. Like, we should have got bullish continuation up here, the way Bitcoin usually does it. But it ain't a bad pullback. I mean, this is not negative. This is not bearish. This is not, I mean, it's down, so obviously it's bearish, but I mean, it ain't like this, right? It ain't like that. It's taken 1, 2, 3, 4, 5 weeks to break down. I mean, support broke down, then we got the continuation. So that's literally when we broke down with this close right here, that's when we started looking for shorts on the daily. And we shorted on this wick high right there, right? As it pushed up, we got short. The problem is my short entry was right in there, 30, 315-ish. And then this day came up and took my stop loss out because when I took profits on the move lower, I set my stop to break even because I honestly thought this day was going to break down. But instead, we got this, puke everybody out of their shorts. I mean, literally everybody. So anybody that got short from this day, which is Sunday, this is when the new week opens. Like this candle got everybody. There's Monday, Tuesday, Wednesday. That's why we shorted it, because we literally smoked every single body that had been short that week. Everybody that was short that week. And we almost got an instant bearish reaction. So I was holding the short. I had 30% of the position still on. I did not expect this. It came up, took me out, and then rejected, and then we broke down. So I missed this move. I won't miss the next one. All right? Let it get back up to 30K. I mean, until you get back above this line right here, this is bearish. This is the very beginning of a bearish signal right here. Because the bulls no longer are in control of this asset on a daily basis. The bulls had ample opportunities to push this thing higher. I mean, how boring was trading Bitcoin in here? Excruciatingly, right? Here we think we're breaking down, then it goes up, then it comes down. But this time you got a legit, I'm talking absolute legit breakdown right there. And yeah, you close back above it there, but what was the very next day? Puke. So now what we wait for is the weekly. If we give up the weekly 21, which will happen within the next 3 to 4 weeks if Bitcoin does not find demand, then I will look to short every swing high from here on out. Because that means you will be bearish on the daily and bearish on the weekly. Higher time frame charts drive price action. There is your pullback though. Like this is Q2 2023 right here. Had a beautiful first quarter, nice pullback and a close above. Like you haven't even tested last quarter's open yet. So you can't get bearish just yet. You know what I mean? Like you can look for intraday shorts because you're under the 21. But I wouldn't go 125x short with my house or my life savings at this point. I'll let you know when you can do that. I'm the best priced analyst you're going to find anywhere. And that's not a boast or a brag. It's just the freaking truth. I mean, you tell me, I've asked people, show me your entries, your exits. You know what I'm saying? Prove it. Prove you are who you say you are. They just don't. I can prove who I am, right? All I got to do is drop right down here and then bam! There's a short right up there. How did you know it was going to do that? I didn't. I took the short based on the DXY, liquidating the previous week's high. And when that happened, I instantly shorted it USD via JPY. And we also heard rumors that the Japanese yen or the BOJ was gonna mess around with the currency because they couldn't see it continue to drop like that. And I'm still holding that position because look what we got here. What is that? That's quarterly resistance, my man. And for the people of Trade Talk, like in the Discord, was watching this level every single day that it traded here. Just watching it. Short. Puke. This was a bigger pullback than should have happened, but look what happened today. Right back under it. Yeah. Yeah, it just overshot the 50s all. You don't want to short into that. You want to wait for resistance to form. When does the resistance form? When the daily closes bullish. That's when resistance forms. You do not try to short on this day unless you retest this price. Usually, it's the next day when you get the push up. But it didn't quite get there, did it? Not quite. Why? It was front ran. People front run these levels. They're legit. Open, high, low, and closes is all people had back in the 60s and 70s. If you were trading on the floor of the New York Stock Exchange, and whatever, wherever, all you had was a napkin and you would mark a line and it looked like this on a napkin. They would have their open, which is here, their low, their high, and their close, and they would just track it. And then technology came out and then you could do it yourself, right? So yeah, and now you can do it at home. That's all you need. Literally, you don't need this. I use this just to tell me, hey, look here. Look. I'm short this asset. Of course, I want it to go lower, right? I want it to go lower. I've been short this asset since June, since the high of inflation. But as far as, price action, when you lose your 21 on the daily, if you get downside continuation, then you go find it on the weekly. Here we are. Why did we bounce this week? Let me go back to candles because just can't look at that. Look at this right here. Why did you bounce here? I'll give you a hint, right? The 21 is still sloped to the upside. So people bought this close right there, that close, and up she went. But did it make it to this close or this open? No, it didn't. Now look what's happening. Go away, blower. You're loud as hell. Yeah. Just watch your 21. That's it. 21 and the RSI. The RSI is literally called the Relative Strength Index. It's just people look at it the wrong way, right? They're like, oh, it's oversold, so I got to sell it. Or even divergences. No, that's not the way you look at it. This is the important part of this indicator. That middle line. That middle line. That's why you see mine is not like that. It's a straight line and it's bright because I want people to see it. Like, these are your areas. These are your areas to look for entries. They line up beautifully with price. And if you can get it lining up perfectly with like a resistance, for instance, that's resistance. But obviously that wick caught most everybody that got short that, right? But look at the move after. Boom. To get continuation like that, that's a good freaking trade if you didn't get stopped out. All right, let me show you Aussie dollar and then I'll answer questions and we'll wrap it up with that. I don't even know if I can find it. I mean, this happened to me on the damn live stream. Right here it is. All right, so let me get rid of that. So that way we got one line on a chart. I'm going to take you and I'm going to show you what that line is. It is freaking support. I told the Discord room that this right here is the first time that we've broken down since the breakout, since we even got above the yearly opening range. I think this is a trap. So I was looking for longs right here. I'll show you real quick. Just that way you know I'm not lying. If you're new, I mean, most of the people in here are not new, so they know I am not lying. I can't find it. Oh, I'm in crypto, that's why. Duh. All right. Right here, this little thing, let me just prop this up real quick and we'll answer some questions, then we'll wrap it up. All right, so here it is. On the day, there's your date, July 25th, 2023, 8:33 a.m. Aussie trying to recover according to the RSI on the daily. I wish I could blow this up. I just can't. But right there, you can see it. It's testing the 50. Testing the 50. Oh my God, what in the hell is going on? Anyways, there it is. So I even had the line drawn out there. And then this is what it looked like on the hourly time frame. Now, you won't see this candle because this candle turned bullish again. And I was long. I got long. I had my stop right under that wick. Right under that wick. Today is what? The 26th. Let's go into the hourly time frame. And that is right here. This stopped me out. No, where is it? Why can't I find that? Let me see here. Right here it is. I got the wrong damn thing going on here. All right, it was hourly resistance is what I was watching. This was daily res, and we got a nice bullish reaction off daily res. That's right. It was only yesterday, and I already forgot. But anyways, so this candle right here is that bearish candle that was stopped right there, right? That's when I took my entry. I put my stop under that wick right there. And then within just a few minutes, it started to go in my way. And I was like, all right, I'm going to take profits right here. I'm going to take profits right there, but it didn't get there. What happened instead was 9:30 happened. It came down, it stopped me out, closed up here, had this, came back down, tested it again, and boom, right through my profit target. Forex has been doing that a lot lately. We used to look for our entries at like 6 to 8. Like I would never take an entry at 9 o'clock. And if I did, it would have to be a good one. But here lately, it's like the moves aren't even happening until like 10 o'clock. But anyways, it's just a little bit like, and never mind the 21 exponential, because the only time frames I look at the 21 exponential on is the daily and the weekly. That's it. I don't care about the monthly. I don't care about the quarterly. I don't care about the 8 hour. Just the daily and the weekly. But I get caught with this crap all the time too, right? Now that long didn't last very long, right? It went all the way right back down, tested daily support again. So we're in a range, but that's the same exact thing that happened to me on Bitcoin, right? We get this pop up, and then I get short, like right at resistance, right there. As soon as this candle comes back down, I take a short, put my stop up there, and then on this candle right here, I take profits, then I grab my stop and I pull it down to better than break even. And then 2 days, 3, 4 days later, this thing came up, took me out of the trade and dipped. So that's going to happen to you. I don't care who you are, right? But occasionally, right? Occasionally, you're going to catch stuff like that USD-JPY trade. Because you are going to absolutely, you know what I'm saying? You're going to nail the top. It's going to happen. You're going to nail the bottom eventually. And one last example over here. I had a long position from here on Bitcoin before the yearly opening, right? We was waiting for this wick to get liquidated. And as soon as it got liquidated, we got long, or I got long. Right there. That's where my long entry was. And if you look at where price is now, right? Like, you couldn't have got a better Bitcoin entry than that. You couldn't have. I mean, if you got very lucky and top ticked it somehow without any evidence of any line or anything down there, right? Then you just got lucky. This was done based on skillful knowledge. But what happened is instead of me looking at my account, seeing which account I was in, I ended up taking a long on one of these situations here, and it was on this account. So it brought my cost basis up. And I was like, shit, now I can't prove to everybody that I'm holding along from there because I freaking screwed it up. So I just closed that position out and then bought again the day of January the 1st. Why? It's the yearly open. Fantastic stuff usually happens at the yearly open. You can go back in time and look, right? Look at this yearly open. I mean, it's barely got a nub down there. Just open and straight up all year long. All year long. Just fantastic. Bitcoin trade's good. This is what's causing Bitcoin to get screwed. You got yearly supply right there. And it's at 29,381, but we know the supply is a little bit higher than that. So I don't know if it's going to break down or not. It doesn't look bad as far as technicals go. I mean, it's 2 quarters up, 1 quarter down, 4th quarter up. I'm okay with that. But if we get 3rd quarter down, like down, then 4th quarter is probably coming back here too. Because there's a gap down there on the CME. So we want to see it to continue up. Obviously, I hold a lot of Bitcoin, but it's just not yet. Maybe it just needs a pullback. So it's not super uber bearish yet. Not yet. All right. And one other thing, we already looked at gold. Coinbase, that's what it was. Look at coin. And coin's been doing its own thing. What happened? Coin's been doing its own thing. It's not trading with Bitcoin, or it hasn't been, right? Nice big move to the upside there. Bitcoin didn't get that. See, Bitcoin just barely took out that 3 times and then dropped. But see how coin, it made a fresh yearly high? Because this was your yearly high, fresh yearly high. 1 day pullback and then explosive move to the upside. Is this done? No, it's not done yet. You got to come back and retest this at some point in time. Now, what'll likely happen is it'll trade sideways in here for multiple days, maybe a week or 2, and let this catch up. It doesn't mean price has to drop here. So I wouldn't be taking a short like here, expecting it to drop here tomorrow. That's not how price works. Usually when it gets really close to the mean, it'll just trade sideways until the mean catches the price. Let's see if we can find another time where that happened. Probably not, because this asset hasn't been trading that long. Here, let's use Bitcoin, because I know we can find an example of that. Here's a perfect example, right? Takes off, it starts to get stretched out real far away. And instead of it getting, well, I guess you could call that a pretty good test, but it mainly traded sideways until the mean caught up. And then it dropped. But this was the yearly opening range. This was the short that we were watching right here. This is the short. We were tested the yearly opening range, and I said I want to see bullish continuation, and then I'll change my bias to bullish. If we set and screw around here for a week or so, I am going to short this baby till the cows come home. And it ended up being a short. So, yeah, I mean, coin isn't doing what Bitcoin is doing. Bitcoin has just been trading sideways AF, and coin is just now pulling back. So, coin, Mara, for instance, doing the same thing. Like, Mara did its own thing. This is what Bitcoin should have done right here. Just like that, right? Just like that. And then Riot, same thing. Just explosion to the upside, and you've had what, a week and a half of pullbacks, 2 weeks maybe. Yeah, 2 weeks of pullback. And then you go look at Bitcoin, and it's just week after week after week after week of nothing. Well, not nothing. You made a fresh yearly high with this candle. You made a fresh yearly high with that candle. Then you dropped. So obviously there's nobody buying at $30,000. The AI for cryptocurrency is also doing very well. Yeah, Brandon's posting these things here in the Discord. This is an AI thing. It picks stocks. He's got one for stocks. He's got one for options. And he's got one for crypto. I'm not trading it right now because, well, I just don't like the strategies. I just don't. Like, for instance, there's no way in hell I'm buying a deep in the money call on Peloton. Just not freaking doing it. But Brian's using it. And I guess he wants me to share it. Here it is. But nobody can see it because I keep my browser hidden on purpose. There it is. You can't use it unless you pay for it, but that's going to be hard to copy. But there you go. Stock GBTC crypto. And then this one is stock GBT options. And he's got one for stocks too. Stocks, crypto, and options. But I trade my strategy because my strategy works. Like, if I start having difficulty and I see my P&L start to go to the downside, then maybe I'll give ChatBT a shot. But like using Peloton, for example, I mean, it wants you to buy deep in the money call. And this thing is still what I would consider bearish. Now, if we break out soon, like if we get above this, then maybe that thing knows something. Because it says to buy it, not this. This says to buy it a September 15, $23 contract. Piton trade, September 15. Deep in the money. $23, $6 call. So it wants you to buy this right there. So if you want to take a shot at it and pay $3 for a deep in the money call, because that's what you're going to pay. You're going to pay on the ask. Anybody that buys, they're buying on the ask. Whenever you sell, they're selling on the bid. So if you want to do it, do it. It's $3. So if you buy one contract, it ends up being wrong, you'll lose $300 max. But it's in the money, so maybe it'll work. I mean, technically, it doesn't look bad. This could be a trap. What am I doing here? This could be a trap. Right here. It could be making bears jump into it. But right? I mean, this thing is bad, man. It's under its IPO price. Eventually, will it catch on? Will people ride bicycles in their house and watch a TV screen? It's possible. But obviously, there's something massively wrong with this stock. But that doesn't mean you can't make money. So if you buy the $3 call, literally what you're doing, was it the $3? No, it's a $6 call. So if you buy the $6 call, it's going to put you in right here. Not there. Roughly right in there. Boom, I did it perfect. So you're going to be in here, all right? Now, just because you're deep in the money, if this stock continues to come down, your deep in the money put or call that you bought for $300 is going to lose value. All right? If it gets here, your call is going to be worth $1 at best, right? But September 29, here it is. I'll do it for you one more time, and then we'll wrap it up. Here is you can try it. You know what? I'll go ahead and try it myself. Oh, I can't. Shit! The market just freaking closed. So you have to do it tomorrow. There it is. 51 days out. 51 days out, the $6 call. And it's going to be, depending on what happens to the market tomorrow, it might be a little cheaper or a little more expensive, but it's only, if you buy one contract, it'll be around $300. And you can just risk it all. I mean, as long as it stays above $6, this option will have value. Now, if it gets out here, which is called at the money, which means if the stock price goes down and you get in around the $5 mark, that's going to put this option out of the money, and on expiration, it will expire worthless. So just look at it how it is, because that's how it works, right? You're buying this right now. So what you need price to do instantly is go up and hit each one of those strikes. And the further you go up, obviously, the deeper the money this call goes, and you make more money. But if it goes this way, then you do have risk of losing that. The delta on it's 88, so that probably means that you're going to have a high probability of it being in the money. Yeah, you got an 80% chance that this option will be in the money at the time of expiration. All right. Thank you guys so much for being here. Thank you all for the ones that stuck around. I really appreciate it. I'll take this trade tomorrow, Brian. If you take it with me, we'll take it. We'll see how it works. But I don't want to, like I said, I want to keep this account doing good. So I'll give it one shot. You guys have a fantastic rest of your day. I guess we'll see you tomorrow morning, because tomorrow is Thursday. So normal time. And we'll take it then. Make sure you guys have a fantastic rest of your day. Trade safe, trade smart, and as always, happy trading, everybody.